Hi everyone, welcome to Market Insight for the week of November 6th through the 10th, 2023. So as usual, we'll start with our top-down approach. Looking at the monthly chart to begin with, we can see that the current monthly bar looks like an inside bar, but we've only traded 3 days so far in this month of November. So we discount that, of course, and the monthly is looking quite constructive. Last month in October, the monthly held the halfway point between last October's low of 35.02 and July's high of 46.34 and a half. The halfway point is around the 40.60 area, and the market so far is held above that, with the October low of 41.22 and a quarter. And as we'll see on the weekly and especially the daily charts, we are getting a strong bullish response off the October lows. And if this bullishness continues, we can expect it to take out last month's high up here. If it does take out October's high, we can then look at the monthly as a shakeout here, the October month on that high volume. So keep in mind what David has taught us about threatening bars like this, right? When a hallmark behavior of bullish markets is that they erase threatening bars. So this is the threatening bar here, October on the high volume. And as we know, high volume also tends to stop the market, which happened here. And we see that the monthly could take out that bar. And if it does, then that's another confirmation of bullishness in this market. And so as we'll see on the weekly and daily, we're already breaking key resistance levels. And we can see this to some degree on the monthly as well. Note we're trading back up above the August 2022 high of 43.27. We've talked about this numerous times, and now we're back up above it. And this is an important structural level. We've been, as I say, we've been highlighting this for weeks, if not months at this point. So the bulls will want to see the market stay above this level. And how would we know that the August highs aren't holding? Well, we would see the daily and weekly fall underneath of it, right? And then start trending down. So that would be a major clue that the August high isn't gonna hold. But right now, we're looking at bullishness here. Let's turn to the weekly, where we see that bullishness coming in spades here. Showing us constructive behavior, we come back into the 4,200 level here. Access line that really started early last year in this area and extends right through to today. Markets traded for almost 2 years, 22 months around this level, where it's alternately been support, then resistance, and resistance. And then we see absorption of this level, of this 4,200 level. And this occurred last spring. Then a jump across the creek, in other words, a sign of strength pushing up through the resistance. And now it looks as if we are completing a backup to the edge of the creek in anticipation of markup, the markup phase. So that's the overall picture, the overall structural picture of this market, as we would interpret it from the Wyckoff perspective. Note also that this 4,200 area right in here has a rich confluence of support lines. Let's blow up the weekly a bit and take a look at this. So this is the current area where we are. And we can see that we have the weekly demand line coming up in here. from last October's low, right? We have the 4,200 level access line that I just discussed. We have prior resistance around 4208 and a half, where the market had to absorb the residual supply. And so old resistance, as we know, becomes new support when we come back from above it and revisit it. And we also have the more immediate daily downtrend line here, downtrend channel, and the support line. So that's lots of support here, and lots of and big confluence in this area of support. And we see that the market has a positive response off of that support. So let's turn to the daily and take a little closer look at this. Again, very bullish behavior. We came to the bottom of the daily trend channel here, the demand line, deep into the confluence of support we just reviewed on the weekly. And it comes into that area and has a V-spike reversal, indicating that buyers are very eager to get long. And that pushed prices up this week with every day since Monday closing above the prior day's close, and all days closing firm on their highs. So we see that starting on Monday and continuing on Tuesday. Wednesday, we broke the resistance, the October swing low here of 42.35 and a half. And then Thursday and Friday continued the trend run up with strong price action. I was actually surprised, a little surprised, we didn't react off of the daily supply line and the August 22 high. Where there was some confluence with that August 22 high, but that didn't happen. And it's just more data highlighting the bullishness of this market. So does this bullishness make sense? I think so. Let's consult the point and figure chart here for some further insight. So this is our standard sort of intermediate point and figure chart. It's a 50 point by 1 point and figure based on 60-minute high-low closes. Lots of people use daily high-low closes, but I had a conversation with Craig Schroeder years ago when he was still alive and when he was running Wyckoff Associates, and we talked about this, and he liked that 60-minute high-low close. Because it just gives a little more detail. So I've always used that since that discussion with him, and I found it to be very useful, very helpful. Not to say that the daily high lows, that's what David used to use, the daily high low closes, and that's a perfectly fine thing too, but this is a little bit more refined and gives us just a little bit more information and more detail and a little more structure, and I tend to like that. Anyway, first off, one of the things to note is that here we had a distribution area back from last year. This went from, I think, November of 2021 to around April of 2022. So late 2021 into the springtime of 2022 shows a good distribution structure. And that count has been fulfilled. We had a count down to this level and we exceeded it slightly. And that fulfilled that count. And now we have, so that's important, right? One of the things that I want to make sure is that we don't have more distribution lying in the wings there, and we don't. And we have our initial count in here that showed cause or preparation to take us back up to the all-time highs around 4,800 and potentially higher. And we also have a stepping stone confirming count that created mostly in the first half of this year up until the beginning of summer. And we see that the point and figure, and we also see, so that brings us back up above the all-time highs as well. So there's plenty of cause in here. And we also see that the point and figure chart, which acts the same way, we can use trend lines and support and resistance lines. And we see that the point and figure chart came down to its demand line here and then is reacting positively off of it. So all this looks bullish. I don't see any bearish structure at the moment. Now, there's also larger counts available that have much higher targets. We could extend, for example, this all the way back over to here, and we would get a count quite a bit higher. But that's premature to bring in at this point. We still have to get up to 4,800. When we get up here, and if we're still bullish, the charts still look bullish, then we'll consider higher counts. But for now, we've got plenty of cause here to take us back up into the 4,800 level. So that's some consideration of the point and figure chart. Also, I want to highlight another bullish indication here, and that's the S&P's cash index, the SPX, or the INX, either one symbol in TradeStation works perfectly fine. I think there's a dollar sign before it, or maybe there's a point X, I forget exactly, but it's the cash index. And we're trading back up above the 200-day simple moving average. Now, you know, we don't use a lot of indicators in this method, but this is one that I do keep an eye on from time to time. The 200-day is followed by just about every fund manager in trading the US markets. This is a key indicator for many funds and many institutional investors. And when the market is trading above the 200-day moving average, the institutions and the funds are looking to buy rather than standing aside or even selling when price gets down below the 200-day index. So just a useful little data point to kind of keep in mind what the general funds and institutional traders are doing. And we would have to say that they are bullish at this point. And taking a look at our major markets here, they all have springs. They all are showing bullishness, you know, the springs here. And very good responses off of those springs. So everything's in bullish mode here for all the markets. So let's take a look and see what's on tap for next week. What's likely here? So we've had quite a good run up. As I said, I was kind of surprised that we continued on Friday. So now we may see a pullback early next week, and a clue to that pullback would be the inability to hold Friday's high, right, on Monday, or if we go a little higher on Monday and start giving us a narrow range bar, the inability to hold that Monday or that Tuesday's highs the following day on Tuesday or Wednesday, right? So we'll be watching the highs along with the general character of the trading on Monday and Tuesday. And so we aren't seeing any shortening of the thrust or clustered closes or anything, a higher volume or narrowed range. So nothing to indicate that we're vulnerable to a pullback at this point, but we want to be aware that we could get shaken out here too. So just watch those highs coming in early next week. The August 22 high level, this confluence here with the demand line, broken support line, which should now be support, right? I'm sorry, this is the supply line, right? And we've broken this, so that should turn into support here. And also the August 22 highs here at 42.27.5. That confluence with the broken supply line should be pretty good support. Now, a deeper pullback might take us down towards the 42.50 level, 42.55 level. That's about the halfway point on this rally. The halfway point from here to here is around 42.55 or so. And that would be deeper than I would expect at this point, given the robustness of this rally. So we might not get, if we do have a deeper pullback, we might not get all the way down to there. I'd be watching the week prior to this, the last full week of October, that high around 42.90 and a half. That high, I've highlighted that in this green dash line here as a potential support level. So I'd be watching that. If that obviously breaks, then maybe we'd be coming down closer to this level, to the halfway point. But as I said, given the robustness of this rally, we may not even get down to this level. We may hit here and then rally up from there. So those are our levels of support, and resistance is fairly obvious. We've got 44.55 hanging out here. And there's a minor access line here. It was support and then resistance. So that should be fairly firm resistance to begin with anyway. But breaking through that level, maybe not initially, maybe later on, then we're coming up to the larger daily supply line. Really, this is the weekly supply line up in here. And that's around the 4,500 level. So that would be our next level of resistance, 45.55 and then 4,500, which also is a nice round number for higher resistance. Okay, so that's what I see for this week. And we'll see how it all unfolds. On coming up for membership this week, we have deep practice on Thursday. And on Thursday, we'll take a look at the quarterly and yearly charts since the third quarter ended this past week. Don't really feel like we got enough time in Market Insight this week to discuss it. So we'll talk about it on Thursday. And we'll see what the higher time frames suggest. And then we will also continue our two-factor or our two time frame tape reading, which we did last week with the 15-minute and the hourly. This time we're going to take a popular stock and we'll look at this on a weekly and daily basis for the swing traders. So that's on tap for November 9th. So everyone, have a great rest of the weekend and a good trading week next week. And I'll see you all on Thursday evening. Take care and bye-bye.